Hello everyone. Let's get started. Thank you for joining the webinar, for taking a valuable your time. Before starting, thank you for Inspira Financials and my good friend Chris for giving this opportunity to collaborate with Inspira Financials. Let's get started. Yeah. First, we'll go through the fund and then Chris will cover the IRA. At the end, we will go through any question and answers. We have enough time to go through each and every question. Please post your questions in the chat. My team is gathering all the questions. We will go through at the end. All right. So about myself, I have over 20 plus years of experience in IT and real estate. I'm member of Forbes Business Council 2026. So far, my main goal is providing financial freedom for my friends, families, and investors. So we have a portfolio of more than 15 projects, 600 plus investors already invested through us. And we have 9 ongoing projects, 6 projects successfully completed, and we have distributed more than $40 million plus back to investors. So coming back to what is this fund? See, we have various vehicles. Fixed income fund is one of the options that we have. This was designed mainly for the investors who is looking for a consistent quarterly or annual payout, irrespective of the project performance. There are so many folks asked, "Oh, what happens? Why should we take risk?" On top of it, some also they want some kind of guarantee. That's why we have come up with this a new concept, fixed income fund backed by real estate assets. Right. So as part of this fund, we are giving 12 to 14% fixed interest rate. The rate depends on the amount of money that you invest. The payout you can choose quarterly or annually, and all those money, this is a SEC compliant. We provide quarterly report to SEC and all the investors, how the money used, how we are distributed. We'll provide all those real estate title documents, whatever it is, right? How the money is used, and it is 100% secured by real estate. It is completely hassle free. You can transfer your money. We have a login portal, fund management portal. There you can check all your documents, project progress, everything end to end. You can manage through online, right? Who can invest in this fund? Only accredited investors are eligible to invest in this fund. So what meant by accredited investor? Any individual who has income more than 200K plus, or a family, if it is a filing jointly together with spouse, combinedly 300K plus per year, or a net worth of $1 million, excluding the your primary home, right? So this is the what anyone who is eligible in this criteria, you are eligible for accredited investor. Those who don't know how to take it, we have our CPAs, we have an online portal where my team can help you guys to get those accredited investor certificate as long as you are eligible. And also sometimes you can use your foreign properties also. We can discuss all those specific related questions one on one on any specific individual situations, right? So that my team can help you to get the accredited investor as long as you are eligible. All right. So coming back to investment summary. So the fund is fixed income, 12 to 14%. Investment term is 5 years. Minimum investment is $50,000. Eligibility, as I mentioned earlier, accredited investors only. Capital call, this project is only one time. There is no capital calls, nothing. No management fees or performance fees. Security, real estate backed assets. I will go through what are all the real estate assets are there underlying this fund in my next slides. Geographical focus, we focus completely 100% DFW market. In that also mainly North DFW, but we might be going across DFW in future. Early exit option. If any investor wants to exit, it is free to, there is no charge if you want to exit after 12 months with a 90-day notice. If anybody wants to exit before 12 months also, there is an option with a penalty of 2%. If there is any emergency happens, there is always an option. But if you want to exit after 1 year, absolutely zero penalty, zero fees, exit anytime after 1 year. And the total investment period is 5 years. All right. So investment options. So we have three notes. The first option is up to 200K. You get 12%. 200 to 400K, you get 13%. Anything above 400K and above, 14%. All right. So what are our assets? All right. We have total two different assets. One are the buildings, real estate building, 100% leased buildings. These buildings are in Frisco, Texas, on the prime location on the Kite Road between Main and El Dorado intersection. Those who know Dallas, for outsiders also, Frisco is one of the top growing city in the entire US. And inside Frisco, this is the most hot location, and we are 100% leased this property. We start getting rents paying from September. Right. So, and so total we're buying two buildings. So total investment we are targeting to rise up to 5 million. We have already got about 1 million. We have launched this product about a month back. We got 1 million so far, and we are targeting to rise another 4 millions in the next 2 to 3 months. Right. We're targeting to close buy these buildings by December. November or December is the target timeline to raise all the 5 millions. It will provide all the title documents by December once the closing is done. So this is the Google map of the location where this is there. It is right on the Kite Road where you see this RealOne Plaza. Right, it's on the main street. It's on Kite between Main and El Dorado streets. All right. The other one is, those are the two buildings. The other asset is we have this is my another project. The name of the project is RealOne Square. This project is total of 47 acres, mixed use commercial. We are building a Hilton Garden Inn and conference center and a lot of retail restaurants. But the remaining things are getting developed in a different way. This the lot that you see, lot 7 is what we are buying with this fixed income fund. That is about 1.12 acres. So again, here the closing of this lot is expected to be done in January first week next year. So this would be the second asset we'll be buying using these funds, and we'll be developing a good restaurant and retail building in this lot 7. Right, and this is the location of the RealOne Square project, total 47 acres, and 100% we are developing this project. Right, so this is a intersection of three cities. Right, if you see the 380 and Kite intersection, right, where you see that HEB that comes under McKinney, where you see the left other side pet supplies and other stuff, those are Frisco. Other side where you see CVS and the project, it is in Prosper. So it is 380 is the one of the major road. It's a highway, and it is very near to Universal and PGA resorts. Just 2 to 3 miles, we are building a hotel conference center. This lot 7 comes exactly behind the hotel. Right. So why invest in this? Right. So as I mentioned earlier, it is guaranteed 12 to 14%. It is a passive income. You don't need to worry about managing and everything. There are no hidden fees, and you have a flexibility to withdraw your funds If you put money in your bank account, you get hardly 3 to 4%. Even if you put in CD or any kind of vehicles, here you are getting the same luxury with a real estate guarantee, with everything managed online. With it is in the bank also you can't withdraw in a CD. Also, you need to have a lock for 6 months, right, to get 3 to 4%. Here we don't have that lock also after 1 year, right? So that's why this is a very good investment vehicle who wants to invest their money passive and get it and have the flexibility and get going, right? So this is just an example. If you invest $100,000, right, you get yearly 12,000 on the first year. Second, you can see the graph. Each year you make $12,000, right? So step by step. So those of you who are interested, please reach out to us. That is the number one step. Then my team will verify and help you guys to get an accreditation certificate. Then you sign the agreement and you transfer the funds, and then you are part of the process. You start getting your monthly returns monthly. So you can invest through your direct money. You can also use your retirement accounts. So now I'm going to hand over to Chris, who is going to go over different type of IRA accounts, how you can leverage it, how you can get benefit, how you can get some tax leverages using your IRA funds. Chris, it's over you.
Thank you. Thank you so much, Srini. Pleasure to be here. Thank you for inviting me and looking forward to our collaboration here between Inspira Financial and RealOne Invest. There's a lot of opportunity here. If we want to go ahead and switch to the next slide. Yeah, again, my name's Chris Barnett. I'm the business development manager here at Inspira. And go ahead and go back one. There you go. So we'll talk about the self-directed IRA, like Srini mentioned. If you're not familiar, I'm excited to share. It's something I'm passionate about. It's a great vehicle for you to diversify your retirement portfolio and get out of the stock market and invest into some of these unique opportunities like this fixed income fund that Srini just mentioned. And I'll be able to do it within a tax sheltered, tax exempt IRA account. So we'll go ahead and move on to the next one just real quick. It's our disclaimer slide. So, anything, I talk about today is just for educational purposes. Do not offer tax, legal, investment advice. Inspire doesn't. We are just the custodian. So we will help you set up your self-directed IRA, move the money in, custody the account, but it's on you as the investor to find your opportunity, do your due diligence before making any investment decisions. So we'll go ahead and go on the next slide. Just a little bit about Inspira Financial. This is a great slide that just kind of gives you a snapshot. We're pretty large. We have just over 8 million total clients across our different product lines. So we offer health and benefits. We do HSAs, FSAs. We actually do fund custody. So for people like RealOne, we will actually help hold the fund and structure the fund as well and help with some of the auditing. And then, of course, a big part of our business is the self-directed IRA space, which I'm a part of. We have just north of 65 billion assets under management. So, for an investor, we've been around for 20 years. We're pretty large, have that size, scale, and security to be able to offer you as you kind of select a custodian. I think it's important to see how long they've been in business, and do they have kind of the size and scope to be able to help you and offer you the resources you need, on your investment journey. So we'll go ahead and go to the next slide. That's just a little bit about Inspira. So we'll jump right in. What is a self-directed IRA? So a self-directed IRA really isn't even a specific type of IRA. That's just the term self-directed is just a marketing term, which basically means that, it puts you in more control over your investment decisions. So I always tell people it just allows you to use your retirement funds to get out of the stock market. So instead of investing at Fidelity, Schwab, Vanguard, where they're going to lock you into stocks, bonds, mutual funds, or their specific investment products, you can open a self-directed IRA with us, liquidate some of those funds, move them over to your self-directed, and then you're really in the driver's seat to invest in private assets. So, like the fixed income fund, multifamily deals, oil and gas, private companies, startups. It's just a great way for you to really diversify. And the beauty is, it doesn't have to be all or nothing. So you can liquidate just a portion of your money, and have some of your money still with the other guys, right? So all Fidelity, Vanguard, and some stuff in the public side, but then move some of your money and invest into real estate and some of these private assets to give you a nice balance in your portfolio. Next slide. Thank you so much. So we'll just jump real quick the different types of IRA accounts, at least that we offer here at Inspira. The first two, the traditional IRA and the Roth IRA, are what we call our individual retirement accounts. So anybody can open these up. The traditional IRA is going to be kind of like your classic 401k. The money, the contributions that go in are going to be tax deferred, meaning you're not paying tax on them now. You're still going to get that tax exempt growth over time within that account. But whenever you get to retirement age and start taking those distributions, that's whenever you're going to pay tax on your money. Now, on the flip of that, the Roth IRA is powerful because you pay the taxes up front on any money you put in. So you have to kind of take a hit on the front end. But then from there, all that growth grows tax free forever until you get to retirement age. And then when you go to take that money out of your Roth IRA, those distributions are 100% tax free. So you get to net 100% of those distributions in retirement out of the Roth. Couple of stipulations. You have to have that Roth IRA open for at least 5 years, and you have to be of retirement age, which is 59 and a half, to be able to take those 100% tax free distributions. But you can see it's powerful. The Roth dollars are just, again, super powerful. They're precious, right? Because you're netting 100% of those distributions into retirement. So another thing that another benefit of having a Roth is you eliminate the required minimum distributions. So as it sits right now, when you turn age 673, if you have a traditional IRA, the government will make you start taking required minimum distributions out of that account, whether you want to or not. With a Roth IRA, those are eliminated. So it's a great tool if you're thinking about inheritance or leaving some wealth behind, spouse, children, grandchildren. It can be a really nice play to try to get more of your dollars into Roth dollars so that you have the option to preserve them. The last two, SEP, simple, those are our business accounts. So if you have your own business, you can open a self-directed SEP or simple IRA. Those contributions come directly from the earnings from your business, but they're much larger contribution levels. So can be very powerful if you have a SEP simple tied to your business to be able to self-direct those and invest into private assets as well. So just some different options. Obviously, it's important to talk with your tax advisor to see which one is most advantageous for you based on where you're at now, tax bracket versus planning and future tax brackets. But again, I'm a big proponent of Roth. If you could take the hit, it makes a lot of sense to try to get as many Roth dollars as you can. Next slide, please. Thanks. And I know I'm going through this pretty quick, and I know, like Srini said, please put any questions or comments you have. Would love to circle back. Just wanted to give everybody the information up front, and then definitely make sure had time to address any questions or concerns that you maybe had. But again, like mentioned, the self-directed IRAs can hold a broader array of asset types, and this is one differentiator for Inspira I want to touch on. With a self-directed IRA with Inspira, we are actually one of the only financial institutions that will allow you to hold both traditional and alternative assets within your IRA account. So what that means is you can invest into a private equity or debt, real estate type project, kind of like RealOne. But then on the flip, we also offer money market accounts, interest bearing. We offer CDs, stocks, bonds. So what that means is kind of like Srini mentioned, if you're invested and you start getting some of those returns coming back, right, that 12 to 14% each year, instead of that money just sitting there, you can park it into something interest bearing until it accumulates enough to maybe you want to reinvest into another private offering. But a lot of other institutions don't offer the traditional side. So your money just kind of sits there like a rock. With us, we can offer something interest bearing while you're invested into those alternative assets as well. So very unique differentiating factor for Inspire. Again, our size and scope allows us that opportunity to offer some of those other options for our investors and our clients. Next slide, please. So obviously the tax benefits is huge. So whether it's the tax deferred or tax free, right, the traditional or the Roth IRA, you're absolutely sheltered from capital gains taxes. There's no taxation that happens within that account, until potentially you go to take those distributions out when you're in retirement, if you have a traditional. So that's amazing. So there's a lot of strategies people use outside of an IRA, if they're just investing with cash to alleviate some of these taxable events. So you probably heard of like 1031 exchange. Very popular if you're using cash to be able to roll the money out of one deal into another. And people do that because they're trying to avoid the taxation and just, reinvest their money into another deal. So that's called a 1031 exchange. And there's some other strategies, but that stuff is not even necessary whenever you use a self-directed IRA because you're in a tax exempt account. So that's what's great. And also a lot of times this money, you don't necessarily need it for cash flow, right? So as you're investing, these type of deals like RealOne is offering are great because you don't need access to your money right now. You're okay investing that capital, getting those returns and then just reinvesting that money and watching it grow over time because it's a retirement account that you don't necessarily need right now. You're just working it and massaging that money down the road to benefit you and your family in retirement. Again, the portfolio diversification touched on that, being able to get out of the stock market and really diversify your portfolio and get into some of these nice real estate backed options that are just kind of tried and true that kind of protect you from some of that market volatility that we see in the stock market, right? Some of the political, factors that can kind of drive stocks up and down and portfolios up and down. You're kind of protected against that, which is nice. And then financial autonomy just allows you to invest in what you're comfortable with. For a lot of people, you're already investing and you already have a passion for real estate and are a real estate investor anyway. So why not be more in control of your retirement funds and be able to invest in what you know best? So, next slide, please. How it gets started, just real quick. So I tell everybody it's 3 steps. This is great. I see just a question that came through. What's the process of investing through an IRA? I think this will answer that question right here, and if not, we'll circle back to it. But basically, it's 3 simple steps. One, you call us, we'll get you an account set up. So we're going to send you a DocuSign application. You fill it out, select which account type you want. We do have a special offering. So normally we charge a fee of $450 per year. So that's a flat rate. That's one time every 12 months. You pay $450 to have that self-directed IRA account open. That's how we make our money. We don't take any commissions. All of your gains are yours to keep. We just charge that fee. But because of our relationship with RealOne, are able to offer any RealOne investors a $100 off of that $450 fee. So for you guys, I can do $350 per year. That's not just for the first year, that's for life. So I'll lock you in every year. I will give you that $100 off and it'll be $350. So again, step one, DocuSign application. It's very simple, takes about 15 minutes to open up your IRA account. Step two, once we have your account open, we'll be funding the account. So a few different ways we can do this. The transfer is the terminology we use if it's coming from a another IRA. So if you have an IRA, a traditional or Roth at Schwab, Fidelity, Vanguard, you can liquidate a portion, transfer it to your newly opened self-directed IRA. Or if you have an old 401k from a previous employer, then that'll be a rollover. Anytime it's coming from a employer account to an IRA, it's a rollover. Either way, me and my team can help you with that process so we can get those funds moved over. Once the funds are in your self-directed IRA account here, you're locked and loaded, ready for step three, which is that direct your investment. So in this case, if you're investing into RealOne, we'll help. We'll get a copy of that subscription agreement. And here's the magic sauce. Here's how it works. We will set up the buyer of the investment in the name of your IRA. So that vesting that we use will read Inspira Financial, FBO, for benefit of your name, IRA, and your account number. Okay. So it's not going to be you personally as the buyer, it's your IRA. And then from there, we will wire the funds from your IRA to RealOne. And then your IRA owns that asset. And subsequently, all those returns, all of your gains will go directly from RealOne right back to us, and we'll deposit them into your IRA for you. So the money never really leaves the IRA. And that's what keeps it all tax exempt and kind of makes it all run. And that's why you need us as the custodian to kind of be that intermediary to make that work. So I hope that answered the question. Super simple. Step one, open the account. Step two, we need to fund it. So whether that's a rollover from a 401k, money coming from an IRA, and then once your money's in, it's just submitting that investment documentation in the name of your IRA, which will help you make sure it's all compliant. And then, your IRA owns that investment and all those returns flow right back in. So that's kind of how it works. Next slide. I think I have one cool example. Yeah. And then I think I'll pretty much be done after this slide and we can dive into more questions. But I always just like to throw this out. It's not really a case example. It's just more of a strategy that we see some of our clients take advantage of. It's called the midstream Roth conversion. So I told you Roth dollars are super precious, super valuable, but a lot of times people don't want to take that tax hit up front. So a play that we see some clients doing is they'll start the investment in a traditional IRA. So let's just say they're making a $50,000 investment for the purposes of this example. Usually in a syndication, it kind of goes on this J curve. So you make your investment the first couple of years. Usually there's some remodel. Maybe it's not rented out yet. So there's a lot of costs, but not a lot of income coming in. So there can be a depreciated value during the middle of your investment. So maybe around year three, you can see on this graph, if it's valued, at maybe only say 25,000, again, it's just a valuation. At that point in time, you can actually have a third party person come in, certify that, pay the tax liability on the 25K, right? Decreasing the amount of taxes you owe, convert that investment over to a Roth IRA and have it in a Roth IRA for the way back up, right? For those fourth, fifth, 6 years when it's skyrocketing. And guess what? Now you have that investment in a Roth and you were able to convert kind of at an advantageous time to decrease your tax liability. So some cool strategies and some cool things that you can do that I can help you with, or my team can walk through, some different strategies to kind of help you out and pick the certain times during your investment where it might make sense to do certain things to help you out. So next slide. I think. Yeah, now we're to the frequently asked questions. Srini, I'll throw it back to you. I don't know if you want to go through these or take some of the chat box questions. Up to you.
Yeah, let's complete these questions. Then we'll go to the chat questions. These are the common questions. We'll quickly go through it for the people who joined late also. So, general about real on investment questions. The minimum. What is the minimum investment? It is a $50,000. What is annual return does the fund target? The fund is targeting between 12 to 14% based on the amount you choose to invest. Is there any prepayment penalty? If you stay at least 1 year, there is no penalty. If you decide to exit within 1 year, then there is a 2% penalty. Yeah. Can I exit before? I just answered. Is accredited investor verification required? Yes, absolutely. We need accreditation verified, but we can help you get that, how to navigate it, any questions, what documents to be provided, and we'll take care of the whatever cost involved in getting the accreditation certificate.
Awesome.
Right. Chris, you
Yeah.
both of those questions about IRA.
Yeah, absolutely. Yeah, real quick. So, can I invest using my existing IRA? Absolutely. We kind of talked through that process, right? If you have that IRA somewhere else, we just need to go through the process of opening the self-directed, and then we can help you transfer the money from your existing IRA to your newly opened self-directed IRA, and then you're locked and loaded and ready to make your private investment. Um, can I transfer the funds from another retirement account? Absolutely. Kind of talked about that, right? You just have to liquidate the portion that you want to move over to your self-directed IRA, but me and my team can walk you through what that looks like, how that happens. It's a very, very easy process. How long does it take? This one's kind of tough. So I told you the three steps. Step one, opening the account, and the third step of processing the investment paperwork. That's all within our control here at Inspira. That's a 1 to 2 day turnaround. The longest part of the process is always step two, funding the account. Go figure, right? Because we're pulling money from another institution. So sometimes they're a little slower, um, when money's leaving their building. But usually I tell people safe within a couple of weeks. Opening the account, getting the money liquidated, ready to move over, wired over, and processing the investment documents. 2 weeks is usually more than enough time. It's a pretty easy process, but again, just pulling the money over. And sometimes 401ks will take even a little longer because most of the time, if it's an old 401k, they're going to cut you a check, mail it to you, and then you got to mail it to us. We deposit it. Not the end of the world, just takes a little bit more time. So it's something to be, conscious about whenever, especially if you're under a timeline constraint. Will I receive assistance? Absolutely. That's what me and my team are here for. So we have certified IRA specialists on our team all day long. That you can call. It's not a 1-800 number. We actually have one IRA specialist assigned to RealOne's investor base. That way, when you call, you talk to the same person each time. They're going to know about RealOne, the investments, and be able to eliminate those headaches and help you out. And then what retirement accounts are eligible to invest, kind of talked about it, right? Those for the traditional IRA, Roth IRA, and then those SEP simple business account type IRAs are eligible. And actually, there's 401k, solo 401ks, and HSAs, but we just don't happen to offer the self-directed HSAs or the solo 401ks, but those you could use to invest as well.
Just give me 1 minute. I'm trying to open these questions. Yeah, just 1 second, guys. Yeah. All right. Yeah. How are the? Yeah, I'm going through the questions that came in the chat. How are the interest payments made? Yeah, you can choose whether you want to get quarterly paid or annual, whatever. We're flexible. Yeah. Okay. Chris, can you go through the second question?
Yeah, the process of investing, like I said, it's the three steps, really. The third step's the most the magic, right, of investing through your IRAs. Once you have that self-directed open and we have the money there, it's all about how we set up the buyer name, and well, that's what we call the vesting on the subscription agreement. And that's basically the investment document saying, here's, I want to invest 100K, 200K. but we will set it up in the name of your IRA, meaning it's going to say Inspire Financial FBO, your name, IRA, and your account number. That's going to be the legal buyer on all the documents. That way, we just send the money directly from the IRA. The IRA owns the investment, and then all the returns will flow back to us to be deposited right into your IRA. So money goes straight from the IRA to secure the investment. All the returns from the investment then go right back into the IRA. It's a nice closed circle process.
So I'll take up the next question. What makes this investment different from other real estate investment opportunities? Yes, this is a very interesting question. First, this is a fixed guaranteed return. This is in the prime location, 100% leased, flexible. You can withdraw your funds at any time with a notice of 90 days, right? 100% leased and with real estate guarantee. Normally, there is no place we have a guarantee plus personal guarantee with, right. Plus, you can invest through IRA, right? You have various vehicles to get the money invested. Next question: what is the exit process after 1 year? You just need to send an email, just reach out to us. A question. Okay. Is there any documentation we need to work with our IRA company for this investment? Yes, you can route through Inspira Financial. Yeah, you can reach out to us. We provide you all those required documents and support. How often will investor receive updates? We provide quarterly updates. Will this investment generate UBTI, unrelated business taxable income, and how is it handled? Yeah. So this investment, uh, yeah, I'm trying to understand this question exactly, but I will try to answer to the best of my knowledge. We provide 1099, so we'll be paying quarterly at the end of, for the whole year, we will get a 1099. You will be using the document. This one, you won't be getting K1, you get a 1099 for this investment.
Yeah. And Srini, I think I could jump in. This is, if we go back just real quick, so that UBIT, it's actually yeah, unrelated business income tax. So it's good question though. Um, this can sometimes be one of the only ways an IRA can generate a taxation, but I'll kind of talk through because it's actually not a bad thing. People could group it as a bad thing, but basically the UBIT or unrelated business income tax, there's actually a subset of UBIT, which is called UDFI, unrelated debt financed income. So if these properties or this investment is debt leveraged, meaning there's a loan, then sometimes yes, it can create a UBIT taxation on the earnings, even within the IRA. Um, that's because again, it's debt leveraged. So if it's not 100%, fully owned and you're using other people's money, then yes, it can generate that UBIT taxation. Now, the great thing is I tell people UBIT only applies to profits. So if you have UBIT, that's a good thing. It means your investment made money instead of lost it, right? And then the great thing is if uh, like I said on my last slide, the first 2 or 3 years usually on these projects, and there's quite a bit of costs and expenses. So basically, you can take those K1s from the first couple of years. If there is any kind of depreciation, if there is any kind of loss, you can actually use those to offset whatever small UBIT or UDFI taxation you may have accrued to offset that, usually to where it's almost nothing or nothing at all. But great question. Definitely with an IRA, you can accrue some of this UBIT or UDFI taxation if it's a debt leveraged investment. But again, it only applies to the profits and it's only applied to the percentage that the project is actually debt leverage. So could spend probably a whole presentation on UBIT. People think of it as a bad thing, but again, I don't because it means you made money. It's only on the profits, and you can definitely offset that taxable amount based on some other expenses and depreciation throughout the investment cycle. Go ahead, Srini.
Thank you,
Thanks.
Chris, for filling in.
Yep,
It's
absolutely.
learning for me as well. Yeah. Yeah, even on IRA or any of your direct investment, the return is 12 to 14% with guaranteed. Oh, ninth question. When moving funds, can we move existing stocks by ETFs since you allow these on your IRA? Chris, can
So yeah, so definitely we could. It just makes it a lot cleaner to just do cash. But absolutely, if you wanted to keep your existing stocks and ETFs, we can move it over. It's just going to be a little bit more paperwork since we offer the same stuff. And whenever you do a transfer, it's a wire, so those transfers happen daily. It just makes it cleaner. It's a lot easier if we just liquidate out of that, send it over cash, and then if you wanted to, just as soon as the cash got here, reinvest into those stocks or those ETFs, you could. But technically, yeah, you could move them over as is if you wanted, since we offer the public stuff as well.
yep. So, yeah, this is only for accredited investors, as mentioned earlier. Yeah, what is the guarantee for the investment is we are buying a real estate asset which is already leased. It's a physical asset. If anybody wants to come and tour the property, you can just come anytime. We are here. My office is right next to these properties. We will walk you through it. We will show you. Even we are happy to show those documents, lease documents, whatever. Also, when if you want to come and visit our office, right? Um, right, Chris. I also got one question while I'm going through the when you're presenting.
Sure.
I really like the what you mentioned, converting traditional IRA to Roth IRA. Is it possible to convert SEP IRA also to Roth IRA for a business use?
Yep. Absolutely. Yep. Great question. Yep. So usually the cleanest way to do that would be because a SEP IRA is pretty much the same as the traditional. So those are going to be tax deferred dollars. So usually coming out of the SEP, we would just transfer whatever portion over to a traditional IRA and then just do a Roth conversion from the traditional over to the Roth IRA. But definitely great question. You can absolutely take some of those funds from the SEP and we can turn those into Roth dollars. You just, again, whatever you convert, you just need to be prepared to take the tax liability hit up front on whatever amount you convert.
Yeah,
So,
I think that's a great option, Chris. I myself need to learn that more how the SEP IRA to this.
yeah. It's powerful, right? For
Yeah,
sure. And trying to get the Roth dollars, makes a lot of sense when you're thinking about long term, kind of, net income in retirement, getting rid of those RMDs and thinking about generational wealth and inheritance. Yeah, it can be powerful.
yeah. Honestly, sometime back, 1 year back, somewhere I heard, but I forgot today when you're presenting it. Yeah, then first I should start doing myself. Okay, thank
Yeah.
you. That's a really great option. Yep, I think that's all the questions we have. A few more? 1 second, guys. We'll wait for a few more minutes. If there are any more questions, please post. We'll Oh, more. Okay. Sorry, guys. It's Google. So it needs to refresh. Okay. Okay.
Yep. So 12, yep. So the returns, yep, absolutely. So whenever we set it up, so once the returns come, instead of just going back into your banking account, right? Because if you're using an IRA, you're using us. So Real One will just wire those monies, those returns back to us, and we will deposit them into your IRA account directly. And with us, I should have mentioned, you will have an online portal. So think about it as like your online banking account like you have right now with Chase or whoever you use, you'll have a portal to where you can go in and see your investments, see your cash. So you'll be able to see as those returns come back, it'll sit there, as like a cash portion. And then from there, like I said, you'll have the option to park that into a money market or something interest bearing, or how you choose as those returns are coming back. Is the annual fee applicable only for alternative? Yeah, it doesn't matter. So absolutely. So that 350 is going to be for alternative investments. And if you're just doing stocks, ETFs, then you probably don't want to have the self-directed, right? It would probably be more advantageous if you just open just a regular IRA. Because I think you can do that at Schwab Fidelity at no charge if you're just doing like stocks and ETFs. So I would say you would only want to do your self-directed if you're planning on doing an alternative investment. And the beauty is, though, once you do the alternative investments, then those stocks, ETFs, stuff like that will come complimentary. There's no extra fee for you to do that. But if that's all you want to do, then it might not make sense to pay the 350 a year for the SD IRA. You just do the stocks and ETFs in your normal IRA until you're ready to do an alternative investment. Um, Same 14, absolutely. That's the beauty. If you're investing through the IRA, all the returns 100% go right back to the IRA account, and that's what keeps it tax exempt, tax free. So you're not using that money personally. It's not cash flowing back to you. It's just going right back into your IRA to reinvest and continue to prepare for your retirement. So perfect. I think 15 is just a repeat of question 13. Good questions, and thank you. I really appreciate it. I hope this was good content and educational. Again, like Srini said, would love. I'm excited about our alliance here, our collaboration with Real One. Both them, coming in and being a part of our network, but we definitely want to be a part of Real One's network too, right? And everybody on this call, please, my contact information was shared. Reach out to the Real One team. If you want to learn more, they can direct you to me and I'll get you, access to my team of knowledgeable people. Would love to have a one-on-one conversation about, what you have going on right now as an investor, talk through your situation if a self-directed IRA makes sense and yeah, and help any way we can. So love the questions, but know that even after this call, I'm still a resource and my team is for you to answer any other questions or have some conversations if you'd like on a one-on-one basis.
Thank you, Chris, for your valuable time. I'm
Absolutely.
learned a few new things today. Um, Folks who need some, you can see the point of contact, email and contact numbers on the screen. I also saw one last question while I'm switching my screen. Does the investor own the property ownership? See here how the ownership is. We have an LLC with the fixed income fund. That LLC owns these assets, right? You are part of that LLC. It's like it is not on your individual name, but your LLC owns it. Okay, since it is a group, it is not owned by any individual directly, but it is owned by all the investors who invested in this LLC. That means in this fund. Okay, even I don't have any ownership. It is combined ownership of all the investors who invested in this fund, right? On the real estate guarantee. Okay, if anything happens, it goes to the investors. Okay. Th- Thank you, guys. I hope I answered all the questions. If any more questions, please reach out to us. Please reach out to our team. We will connect you with the Inspira team as needed. We will walk you through the properties. We are happy, right? We are happy to help. You don't need to. There is no like no. No need to worry about obligation or whatever. You can just come to our office, learn, right? Discover about different options. I'm open to discuss any other things, general ideas, investments as well, right? That way you are free to make a right decision. End of the day, our goal is bringing financial freedom for my investors, friends, and families. That's our mission. We want to achieve. Everybody gets it, but at what age, right? So our goal is to get you that as fast as possible. Thank you guys for making time. Thank you, Inspira. Thank you, Chris, once again. Thank you.
Yep. Thank you, Srini. Take care.